Penn is becoming a greater force to be reckoned with and becoming too large to fail.
Good morning, good evening, or good afternoon, wherever you are in the world. The topic on the table today is discussing the opportunity presented in Penn National Gaming, ticker symbol PENN.
Today's video will be broken down into 4 parts. Penn's $1.7 billion acquisition plus its vertical integration, the pandemic and post-pandemic tailwinds, the Barstool Sportbook expanding, and what do we plan on doing? On August 5th, Penn announced that they will be acquiring sports media and gambling company theScore for $1.7 billion to increase their dominance in the sports media and gambling industry. This takeover marks Penn's progression like many other sport wagering companies seeking vertical integration, with reducing costs to move technology in-house. This acquisition is a perfect fit that allows for tremendous integration between media and sports betting, allowing them to have one of the best customer acquisition costs. With Barstool a leader in digital media for sports and pop culture news, and theScore successful in customer retention and engagement, the two create a platform that becomes irresistible to leave for a user. Penn's strategic acquisitions allow them to stay ahead of the pack, and the theScore acquisition was no exception to that. Not only does theScore provide users and technology for Penn, but it allows Penn to tap into the Canadian market. According to Jay Snowden, Penn's CEO, theScore is the #1 sports betting mobile app in Canada and #3 in North America. With theScore being a leader in their home market, it provides Penn a seamless entry into one of the fastest growing sports wagering markets today. Penn's competitive edge on other sports gambling companies is only improving, filtering out the smaller guys and asserting their dominance within this industry. Penn is becoming a greater force to be reckoned with and becoming too large to fail. Overall, Barstool and theScore create a powerful synergy that can hopefully increase their market share in the sports, media, and gambling industry in both the United States and Canada.
The pandemic has been a roller coaster ride, and it's still uncertain when it will end. Just like many other companies, Penn had to navigate through the turbulent times by adjusting their business model to adapt to the new environment. Despite having a large presence in the brick-and-mortar casino industry throughout the US, they had to shift their focus on improving Barstool, as that'll become their primary revenue generator due to the lack of travel that has persisted during the pandemic. But with travel slowly coming back, Penn will once again retain that revenue source, then hopefully improve their quarterly earnings entirely. Before diving into what exactly Barstool Sportsbook is and where they plan on going with it, let's clarify that gambling isn't legal in all 50 states. And currently 24 states have legalized sports betting. Barstool Sportsbook is their hub for all things sports gambling, media, news, and much more. It offers the user everything they need to know about the latest scores on their favorite teams to important news and even their current gambling bets. But despite having the intuitive, user-friendly platform, the Barstool Sportsbook is only live in 3 states, including Pennsylvania, Michigan, and Illinois. However, in their latest Q2 filing, Penn reported that they plan on launching the Barstool Sportsbook in 4 to 5 additional states in the time for the football season, and at least 10 states by the end of this year. This is a significant improvement for Penn for multiple reasons, besides the fact that their revenue will increase by a large margin. 1, with Barstool Sportsbook usable in more states, it gives them more brand exposure, boosting their brand image in the states that were unfamiliar with the service. Brand recognition is extremely important with this space, as it drives sports enthusiasts and regular folks to start using their hub for everything regarding sports. 2, it is important to be the pioneer in each state, as legalized sports gambling is inevitable. With more states in recent years legalizing sports gambling, it'll only become even a larger industry in the foreseeable future.
Just this past week, I started a position in Penn for 2 reasons. 1, the stock has been beating down the past couple months, and I thought I'd find some good value purchasing it at these levels. Let's take a look at some technical analysis now to share why I believe Penn offers some significant upside surprise. From its all-time high set back in early March, Penn stock hit $142, but has seen downtrend ever since, falling over 50%. However, just this past week, Penn stock received some serious volume and momentum, breaking a key level of resistance, and that's $75. Before Penn broke under $75, it was previously used as support several times, and with it smashing through it this week, it may reuse that as support once again. Since Penn broke above $75 this week, the next 3 targets I have would be $85, $92, and $99. From the current price of $80, there would be a 24% upside from 80 to 99. So $99 would be my short-term price target for Penn. 2. With the acquisition of theScore, Penn continues to grow stronger fundamentally, allowing them to increase their dominance in the sports media and gambling industry. The sports gambling industry is extremely concentrated, with hundreds of different companies, but Penn has solidified its position as the industry leader. And with sports media and betting expected to expand over the next couple of years, Penn should be able to maintain its market share or quite possibly increase it over time. Only time will tell, but Penn is definitely on the right track to succeed in the couple of years.
Penn offers a quite unique entrance into both the brick and mortar casinos as well as the rapidly growing online gambling space. With Barstool in the recent acquisition of theScore, I believe they will hold a dominant position in the online area. If Penn offers what they intend to do with online gambling, we could easily see a 3x result from the current valuation. That's why I plan to enter a long-term position in Penn for the next 2 to 5 years. Penn's action in the short term is hard to predict, but with the growth of online gambling, it is likely Penn will take a large slice. To conclude, the risk to reward ratio for Penn at the current valuation is too attractive to look away from right now, and thus we believe that Penn is a strong buy.
Make sure to check out our Instagram page right over here where we post daily stock market picks and updates.
Be sure to check out our stocks, it's Twitter and Discord, all linked in the description below, as well as hit that like button if you enjoyed the video and hit that juicy red to and subscribe to those post notifications also down below to keep up with our next videos. Other than that, we would also really appreciate if you left a comment below telling us something we can improve upon or a video suggestion for next time. Thank you for watching and good luck on your investment journey.
Bye.